Hi there, this is Matt Chart, bringing you another gold and silver analysis. Today we're looking at gold, and today is February 18th, 2011. We're looking at a long-term chart right now in gold, and basically what we can see is this nice channel formation. Blue's the support line and red's resistance. You can see when it touches blue line, it bounces, and when it touches the red channel line, it pulls back. And so basically this is a long-term channel. You can see each one of these sort of arrows I've drawn is a connection with the blue line. And I did a video update a little while ago. It suggested we could see a bottom around 1320 on the gold price, depending on how fast we see a pullback. And you can see the pullback started to accelerate after I made my analysis. Went a little lower than I suggested. We went to 1308, but we did bounce from the long-term support line, and this is a trend line which needs to, as long as the price stays above this trend line, it suggests that the bull market is intact. If we were to break below this level, it would probably suggest that we are going to see some sort of selling or a long-term consolidation. But right now, we are moving in an upward channel, and we've just bounced off the support line, so we should see new highs coming very shortly in gold. Silver is a little bit of a different story. This is a long-term silver chart going back a few years, and I've done something similar with silver as I have with gold. We've got this channel here where we've got support and resistance. Now these lines move in parallel to each other, and it's interesting, every time we come in contact with the blue line, we bounce from it, and when we touch the red line, we pull back. Now something interesting happened. The Federal Reserve started monetizing more debt. They announced quantitative easing too, and it pushed silver prices above the channel. So we've now broken out of the channel. We've now formed a new channel. So as you can see, this was our old resistance and this was our old support. What we're now able to determine is we've now have a more steep channel that's formed. We've got this blue line. Once we've got two low points, we can take the low point before our breakout occurred, and we've got this retrace that happened where we hit a low of 26.38. We take those two bottom lines and we draw a trend line. What we do is we take a parallel line and we pull it up to our high points, and this is giving us our channel. We haven't really confirmed the resistance a second time, but currently the silver price does look like it's headed up into this resistance line. Unfortunately, we can't see stock charts. I can't pull up where the price would actually be, but we can use some calculations that I'll be sharing with you shortly to give us an estimation of where that top channel price may be. Now, if we are looking at something else I wanted to mention here as well, and I just added this to the chart. If you guys have been watching this, you haven't seen these numbers before. This is an Elliott wave theory, and silver seems to be following this pattern very well. And what the Elliott wave theory suggests is that stocks move up in 5 waves with corrections. Waves 1, 3, and 5 are positive, and 2 and 4 are down waves. And then we see a 3-wave correction, which is the ABC. So what we have is an Elliott wave 1 move, and the numbers are counting the ends of the move. So this move here is 1. This move here is down is 2. Here's 3. Here's 4. Here's 5. And this signals at the top. Now we need a correction, a 3-wave move down, and usually the bottom of the third moves is the lowest point. Now we've got 1, 2, 3, ABC, 1468 was the low. Now we've entered into consolidation after that. You can see the price came up near its high and didn't break it, and we just sort of moved sideways. Within the channel, we stayed above our support trend. And we had a breakout. The resistance and the support got very tight together, and the price needed to move one way or another, and we broke out past this resistance. And now what's interesting is that we may start to see this Elliott wave cycle begin again. Wave 1 went from 1777 to 3121. That's a 75% increase in one move. Now we've got a retrace, which gives us our wave 2, and also establishing where our channel is starting to look like, similar to how once we had our 2 low points and a high point, we could predict where the next high point and low point and high points would be. So we can now predict that this is an Elliott wave 3 count that we are having, and it should take us up to our top channel. Now, a 75% increase from 2638, what we saw here, this was a 75% move. We may see a similar 75% move. That would take silver all the way up to 46.17. Sorry, I lost myself here. $46 is the target on this move. And what's even more exciting is once this $46 area target is hit, we're going to have our wave 4 down and another wave up, which could put silver well above $50 into the possible $60 range in this year. So it's very exciting to see what will be happening, and as we chart these moves, we can get a better idea of where exactly we will be, you know, depending on how far our pullbacks are and where our tops end can give us better predictions. But this is what the data that we have to work with. Looking at the gold short-term chart, this is what's happened over the last short while. We can see that we've got this correction here and a breakout. Now gold hasn't hit new highs yet like silver has, so gold is lagging the price of silver. Silver is outperforming the price of gold at the current time, but we did have a Fibonacci retracement very close to 38%. That was 1325. It came as low as 1308. A little bit below where we also had some price support, this blue line here. You can see around 1315 area, 1326 we had some lows and came a little bit below that area, but we only spent 2 days below it. And here was our breakout. So we haven't broken above our old highs yet, but that should be coming very shortly. Now silver, a little bit more bullish. In the last video update, I suggested that silver would be more volatile and should see a bigger pullback. I was expecting silver to come down around the 25 area. You can see that $25 area was a resistance and then a support, and to me was a logical bottom. But unfortunately, or fortunately, didn't quite come down that low. We came to our 38.2% retracement, similar to gold. The 38.2% retracement was 2608. We came to 2638, very close to what we were, or yeah, 2638, very close to what we were seeing before. Now, the first run here that we saw in silver in our Elliott wave cycle was on this sort of a grade of a trend line. Here we've got our pullback, and now we've got this third wave in the Elliott wave cycle just beginning. Now, if we look, actually, the grade of this move up is more steep than what we saw here in the past. So it's potentially saying that the price gains on this move of the Elliott wave 3 is going to be more explosive than what we saw in the past. So we've confirmed this 3 times here. It should signal that this is going to be our new trend line. You can see we tested it once here, here, and here, and usually when you touch a trend 3 times, you should consider it's intact. Here we saw silver confirmed twice, and then it started to lift from it, and then we came on a retracement and confirmed that trend line a 3rd time, and we used it here and here and here as well. So we've touched this line numerous times. It was a perfectly straight line, and here we've got this new wave building. Now we can also look at the gold-silver ratio. This is the price of silver compared to the price of gold. How many ounces of silver does it take to buy an ounce of gold? In the 2008 stock market crash, it took 93 ounces to 94 ounces of silver just to buy 1 ounce of gold, suggesting that silver was very undervalued to gold. And generally when the ratio comes to around 45 to 1, gold is undervalued to silver, and generally we start to see gold start to outperform silver when we reach these areas. You can see this goes back all the way to 1991. So this is a 20-year chart. You've got this 20-year price support area of around 45 to 1 ratio. Now, what is actually happening is silver is now breaching this ratio. Now, you've seen the charts that I showed you that silver is outperforming gold at quite a fast rate. This ratio is going to continue to move lower, meaning that silver is going to become more valuable compared to gold. Now, this is only a 20-year chart. This is a short-term chart in the relative view of gold and silver over its historic levels. Gold and silver has been used for thousands of years, and historically that ratio is around 15 to 1. So what we can see now is that this ratio is now beginning to advance, and we should see silver prices and gold prices move to within that 15 to 1 ratio again. We saw it in 1981 where it went to about 17 or 18 to 1. Saw something similar in 1933. And when gold and silver are used as currencies, that is the ratio usually of gold to silver when they're used as monetary assets. The financial collapses that we're seeing here today, we're seeing that ratio begin to close, and we should see 15 to 1 ratio again. And not only that, but the fundamentals of silver are so bullish, and that silver is so rare because we've used it up in our consumption, that we could see that silver's been used in industrial consumption. Most of the silver is gone today. We could see that ratio go to 10 to 1, to 5 to 1, even 1 to 1 or more. So it is a very exciting time for silver, and silver investors are just beginning to see their investments appreciate. And that is the analysis for today. And feel free, I'm going to put a link to these charts. If you wish to get a better view of them, you can find them where you can find them. And feel free to stop by. And thanks very much.